Good morning and welcome to the XM.com weekly market update. With me again is Peter Mcguire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Bit of activity on the market.
Just a little bit.
Bit of geopolitical tension.
I would say that if NATO strikes, that bands them all together and all of the nations are under one umbrella and they're up against a formidable foe being Mr. Putin. It's going to be, and the US is involved. So he's aligning himself, he's flying into New Delhi, I understand, to meet Mr. Modi.
Right.
And he's very strong with Mr. Z, as we know. So, he's got some pretty good partners in crime.
Yeah, hopefully.
Or not crime, pretty good partners.
Yes, well, hopefully they settle things down. So, but anyway, Aussie dollar.
Yep.
It drifted into the 64s earlier this week, which we anticipated, under plenty of pressure, but a lot of the currencies are like this at the moment on the back of the strong US.
Absolutely, and if things do ratchet up, we understand the positioning as far as any rate cuts, and it looks like there won't be anything in December. So in turn, that US dollar will probably tick up higher. It's through 106. Aussie's been crushed, and all the currencies have. And that's been an enormous market. We said that, keep an eye on it, trade it, and they shorted it. And that's really a 6-week window from 69 to 64. That is showtime.
It's a big drop.
Oh, and it's nearly parabolic or reverse parabolic, isn't it?
Yeah, great for the currency traders for sure. So that they love the volatility.
You bet. And I don't think that it's going to back off in the last 6 weeks of this quarter, considering geopolitical, as you referenced. And we can't, we sit here in Australia a little bit immune, but when you look at the real world, what's going on, it's a pretty frightening place.
Yeah, there's plenty of spot fires, that's for sure.
Yeah.
So, UK, the GDP numbers came out last week, 0.1%, pretty low number considering where it was at. But once again, we've spoken a fair bit about the UK and the economy. There seems to be a little bit of improvement there, but coming off a very low base.
Absolutely, and how it's going to wear on naturally this quarter, I understand those numbers, but leading into the Christmas period, jobs are hard to get. The whole fabric of society is pretty hemorrhaged from just non-performance, high interest rates and so on, inflation. I know it's under control, but there's still a lot of hurt there on Main Street. Yeah,
and you sort of think the inflation numbers are coming out later this week, or tonight actually, so they're expecting that to be sub 2% now. So you sort of think that should give plenty of scope for the BOE to
cut them aggressively.
Rates. Yeah, you would think so.
You would think.
See how they play that out. US last week, CPI numbers ratcheted up only a tiny bit, still in that 2 to 3% range, but they wouldn't want that to go much higher.
No, they wouldn't, and that's the fright. And you've got energy prices relatively low considering where they were in the last couple of months. So that's not a good sign. I noticed that shelter inflation rose 4.9% year on year in October. So that's nearly 5% for the price of rent. And as we know, that really impacts inflation dramatically. You've got a place and Australia's suffers the same curse.
Yes.
Landlords want, naturally, with higher interest rates, they want a higher rent, and the flow-on effect to the wallet or the purse is dramatic. Yeah,
for sure. Looking at their GDP as well, once again, the GDP numbers are very solid in the US. I mean, we've talked about, don't go against the US consumer.
No.
But the numbers are there. So I think there's probably pockets of weakness in the US economy at the moment. So it's holding up reasonably well, and it has done for a couple of years now, post 2022.
Youth unemployment's very worrying at 9.5%, and that's a great concern naturally. It's its lowest. I've made a note of that since August of 2021. And as well as I do, being a parent, you don't like to see your kids not being able to get a job, or what happens as far as social unrest, all of those sort of things. So we've got to keep a very close eye on that and how the US moves forward over the next couple of months. It's there's a lot to happen between now and 2 months' time in the inauguration, isn't there?
Exactly. Finally, the dollar index.
Yeah. Wow.
Solid. We talk about the drop off in the Aussie. We've got the reverse here.
That's it. You know as well as I do, if you would have traded these currencies over that 6-week window, you'd be now sitting on a banana chair, absolutely laughing your head off. And that's a massive move, nearly up 7% from the lows of 100.3 sort of thing at the start of October, all the way through to 107. It's given up a bit of hot steam, but you've seen also gold come back. The markets have been dynamic. If you're looking across the whole fabric of commodities and currencies and bonds, it's just, and throw the equity market in there as well. There's no shortage of big dynamic moves, is there?
No, it's been huge.
Yeah. And I mean, that really is, that's chart of the year in a lot of ways, that last 6 weeks.
Yeah. And as you say, if they don't drop rates, you would sort of think that'll be heading to 107 pretty quickly.
Well, you know, there's the other side of it, and I think that they'll sit on the sidelines. There's a big chance that they'll sit pat and no change in December or January. So that's going to lead us to February, and then what does President, under his watchful eye of the Fed, what's he prepared to do as far as interest rates?
Yeah. Well, who knows? It's I think that's the unknown at the moment. Once the new administration comes in, they're probably not going to give away too much prior to that date anyway.
Yes.
There'll be bits and pieces that will come out, but yeah, we'll see. We sort of think like the US have dropped rates 75 basis points already, which is a decent sort of drop in, in an economy that's performing pretty well.
Yes.
So yeah,
well, certainly stock market wise, it is.
Yes. So it'll be interesting if the Fed pulls the trigger again or not, but we'll wait and see and keep an eye on things.
Yep, it's never short of surprises, and that's the joy of these markets.
Yeah, for sure. All right, we'll keep an eye on that and regroup next week.
Look forward to it, Andrew.
Great, thanks, Pete. And that's the xm.com weekly market update.